Okay, it's Saturday early afternoon, and it's a bit of a nippy for us, 22 degrees. Now I know people in Melbourne will be scoffing at me complaining about that temperature, but it feels cool here, and because I've got a flat that's elevated, I get quite a good cross breeze. I get quite a southerly, and I'd like to air out the apartment, but the downside is that at this particular time of the year it can be quite chilly, especially if you've got a breeze as well. So while you're freezing your asses off down in, say, Melbourne, I feel similar way, even though it's obviously the situation is totally different. Actually, the top temperature here today is going to be 23 degrees, which is relatively cool for us. And the low temperature is going to be only 19, so there's not much of a range at all. That's quite incredible. But anyway, the purpose of this video, as usual, what I'm going to start with, of course, it's coronavirus. And I guess we could say that it's actually good news in that there's almost 400 cases, but 397 in Victoria just released today, but only 3 deaths. So I guess that's good. I mean, it was looking a bit grim when there were 13 deaths 2 days ago. So now it's down to the 3 deaths. Some interesting news. The couple I refer to as the bubonic bimbos, the supposed 19-year-olds. Well, the press got that one wrong for a start. They called them 19-year-olds plural. One of them is 19. The other one is 21 years of age. But never let the facts get in the way of a good story, as they say, and that's my feeling about the press. They're pretty slack. And I've actually given you 2 different headline pages here to compare. One is from the Herald Sun, and the other one is from the Daily Mail Australian edition. Daily Mail is a British tabloid, and you can see the difference. It's a bit more sensationalistic, and that's just the way the press is over there. The bubonic bimbos really are getting under my skin when you find that someone in an aged care facility, that they've actually linked their particular case to these females. Well, you know, it doesn't exactly endear them to me, and I'm sure many other Queenslanders are also feeling quite furious about this. So I have heard that there may be consequences. There may be more than the $4,000 fines. It looks like they're going to be charged with fraud, which of course they should be, because they lied to government officials. And maybe there's going to be a harsher penalty. That would be nice to see, because this is it's sabotage. You know, just walking around. They're biological bombs, bubonic bimbos. So, you know, we've got to make an example of them, in my opinion. The virus, of course, is not just affecting Victoria. That is the worst place. I mean, New South Wales is having problems. But, of course, even Vietnam. Vietnam was fairly scot-free of it, but Da Nang, which is in central Vietnam, they've actually, there's a bit of a cluster happening there. So there's a bit of panic in Vietnam because they're not used to this. They've had a pretty good run so far. The only thing I can sort of put down there is that Da Nang has quite a high Chinese population, so they may have had people from the Chinese mainland coming in. I don't know, it's just pure speculation on my behalf. But when I looked up, before I travelled to Da Nang a year or 2 ago, I checked out the place, and it said that there was quite a bit of Chinese business taking place in that particular city. Also, we had some figures from America regarding their economy. In the first quarter, on an annualised basis, the economy dropped 4.8%. So that's quite a big drop, especially considering that only a few weeks of the actual coronavirus effect is included in that particular quarter. So there's a lot worse to come, obviously. So some people are saying it's going to be a replay of the Great Depression, the way things are going. So we're talking really serious situation here. And of course, we're not immune to it. Australia's also got major issues, and one of the big areas where there's going to be some major trauma for people with household wealth is in the real estate area. And Martin North, who is a statistician, he went to Oxford University and actually studied philosophy of all things, but now he's become a fairly prominent statistician when it comes to the economy. He actually put out a very stern warning to people contemplating buying into real estate at the moment. He said, basically, don't. He's looking at it and he's seeing very choppy weather ahead, which reflects the way it is here today, I might add. So the situation with mortgage stress is that outer suburbs, there's a lot of mortgage stress there, and that's basically because of their own mortgages, but there's also a lot of mortgage stress coming up in affluent suburbs, and that's because the investment properties are taking a hit, and that's where they're getting stress from. So what he's predicting is that a lot of affluent households will be offloading their investment properties, at least trying to, and that's where you're going to see an acceleration of price drops in real estate. He was really, really worried and fairly angry, and he says that people need to know that all the danger signs are there, that real estate's in for quite a substantial dip. So it's just something to think about. It's not exactly a big secret to people that real estate is going to be in danger, but he says that especially investment properties is where the major weakness is occurring, and it's going to have a compounding effect on the rest of the real estate market. So it sounds quite plausible to me, and this guy has got the figures to back it up. So if you're interested, go and check out his site. Digital Finance Analytics is the actual name of his company, and he posts quite regularly online. And he's not a hype artist, and that's why I like checking him out. He can be quite dry, actually, at times. Sometimes it's better when you've got someone else speaking with him, because he can just get right into his stats, and yeah, it can almost be like grass growing, but he's actually a little better than that. So I don't want to... I think the main thing is Martin is not a BS artist, and that I appreciate that, because there are a lot of people online who are basically get clicks and memberships and what have you through basically predicting that the sky's falling. He's not like that. That's why it was quite interesting that he posted this warning. He doesn't do that normally, so he was quite insistent we need to be very careful with the real estate. And personally, I'm so happy I got out of Melbourne, because Melbourne is taking the biggest hit. And the reason Melbourne's taking the biggest hit is because the immigration has stopped, and also the students coming in from Asia, they've stopped, and that's the economy of central Melbourne has been based on those things. And now basically it's a ghost town in the CBD where my flat was, and I offloaded over 3 years ago, and I've got absolutely no regrets whatsoever. Look, I don't know what's happened. Real estate here must be affected to some degree, but it's from a much lower base. So if it has fallen, it's much less of a fall than it's going to be in places like Melbourne and Sydney. Yeah, the only other thing I'd like to say is that I'm actually I just bought up a whole lot of CBA Commonwealth Bank shares when we had this dip early in the year, and it looked like a good deal. I got some of those shares for about mid-50s, which is very low, and up to about $69. The trouble is that if real estate takes a bath, the banks are going to really hurt. The previous dividends, for instance, on CBA shares were $2 a share. I'm expecting that to go down to $1 a share, and I may not get any dividends. There's a possibility they may stop all dividends, but I think Commonwealth Bank is probably the least likely bank to basically cut out all dividends. But if things get worse, they may have to capital raise, and there could be a lot of problems for the bank. So what seemingly was a bargain earlier in the year may not end up that way. That's the nature of the stock market, I should say. The other thing that I'm thinking about is I'm a bit concerned about the whole banking system. I mean, as everybody knows, you can't basically get a return on your cash anymore. If you've got cash reserves, you're basically losing money every day, because I'm getting 1.5% through Credit Union Australia, which is probably one of the better rates. You may be able to get a slightly higher rate on a term deposit, but basically the inflation rate that is stated, there's a lot of dispute about that. And as everybody knows, the cost of living has gone up this year. And it's probably more likely to be around the 5% mark, maybe higher, maybe up to 9% inflation. If you're only getting 1.5%, it's a lousy deal. So I've been looking at options to do with another way to basically keep my wealth intact, and that would be to go into the precious metals. Now, I don't like the idea of necessarily buying gold bullion, for instance, because then you've got to have somewhere to store it, and you've got to pay that person to store it. So what I was thinking of doing, and the timing is not right now because gold is really, really going through the roof. That train has left. But when it does come back down to a reasonable level, and I'm hoping that might be a little later in the year, barring some other catastrophe, but 2020 is full of surprises, so who knows. But if there isn't a catastrophe, then presumably the gold price will come down a bit. And then I'm thinking of possibly, rather than buying gold bullion, what you can do is actually buy shares in companies. There's actually the Western Australian Mint is one of them. You can actually buy into that, but the problem with that is that it's not as if you actually own that gold. You will be basically a creditor if something goes wrong with the bank that underwrites the particular shares that you buy in that particular company. So there is a level of risk there. It's probably fairly low, but it is there. Now I want to have the equivalent of owning gold. And the only way you can do that, there's two other companies. One is called Gold, that's an easy one to remember, GOLD. They have a slightly higher management fee, which I think is 0.4% per year. So you're banking on obviously the gold price going up so that it covers your costs of actually having that. It's not like normal shares in that respect. You're not going to get dividends, but you're going to, if you buy at a time when gold is down, then you've got some buffer there, and if the price goes up, then you're keeping the value in your asset, and you have a very low cost to actually for the actual gold, and you can draw on the gold. You can convert to physical gold if you need to, if the whole economy disintegrates. And this is not financial advice. I haven't done it myself. This is just something I'm speculating about, and something I only discovered the other day as a possible option. I'd rather do that personally than say go into one of these companies that keeps advertising for buying gold. I wouldn't want to deal that way. I would feel more comfortable having buying into the ASX, mainly because you can buy and sell. Once you bought there, it's a convertible. Well, if you want to get out of it, you just sell the shares. So it has that liquidity, which if you have physical gold is not quite as easy to sell. I mean, I'm not saying it's hard, but I personally it's the best of both worlds as far as I can see. But I just thought I'd bring it to your attention. It's certainly not any form of investment advice. I'm the last person who should be advising people. I've made some terrible decisions with the stock exchange. But I've made some good decisions too. I bought some shares earlier this year when the price dropped, not just CBA shares. I also bought Worley Parsons. Well, they used to be called Worley, now they're Worley. And I'm used to those shares because I bought them before, and I know how they respond. They move very, very quickly one way or the other, which can be fabulous or it can be a real nightmare. But the price is very elastic with them. The same as with the reject shop, there's that sort of share as well. It goes up and down very quickly. But I bought those Worley shares, and I was able to get rid of them, and only after a month or two, and take a reasonable profit. It was the right thing to do because they've come down again, and And so that worked out fairly well. See, it sounds crazy, but they do have personalities. They have, some shares will move really quickly one direction or the other, which is fantastic if you can pick the dip in the market. And this dip was very short-lived, funnily enough, the one with the coronavirus. It only actually lasted for a few days. And unlike the GFC, which apparently went on for about 18 months to 2 years. So it's so hard to pick what the share market's going to do. Please consider subscribing to my channel if you think there's anything there of use to you, or entertainment or whatever. And either do that or give me a thumbs up, or if you're feeling really energetic, do both. That'd be great. But please don't ignore me. That's the worst thing you can do on YouTube, is be ignored.